Hello, this is Alex from Alex Silverman Official. Today we are examining a policy announcement from government officials that relates to precious metals. Specifically, we are analyzing what officials said about managing the supply and pricing of critical minerals, with focus on silver. This is important information because government policy direction affects markets. Understanding policy helps explain price movements and market dynamics. So let us break down what happened, what was said, and what financial analysts are saying about the implications. On February 4th, 2026, representatives from over 50 nations gathered at a State Department event focused on critical mineral strategy. During this gathering, senior government officials made statements regarding how the United States intends to manage its approach to critical minerals access and pricing. This gathering was covered by mainstream media and is documented in public records. According to the statements made, government officials indicated that the approach to critical minerals will involve what was described as establishing minimum price levels. The exact language used was about preventing markets from being flooded with materials at artificially low prices that would undercut domestic production. Officials discussed using tariffs, which are import taxes, as a mechanism to maintain pricing at reasonable levels. This was characterized as protecting domestic industry while ensuring stable supply chains. Now, it is important to understand what tariffs are for context. A tariff is a tax on imported goods. If a product is imported below a certain price, a tariff can be applied to raise the effective price to importers. This is a tool governments can use to influence import prices and protect domestic producers. The discussion centered on using tariffs to ensure that imports of critical minerals stay above a certain price floor, meaning minimum price level. Silver was specifically mentioned in these discussions as a critical mineral. This is notable because previously silver had not been officially designated as a critical mineral by the United States government in recent decades. However, in recent months, officials indicated they would be examining whether silver should receive this designation. The reasoning cited includes the metal's use in military applications, electronics, solar panels, and various industrial processes. To provide context, the United States Geological Survey had previously published a list of critical minerals, and silver had not been on that list historically. However, based on statements from officials, there appears to be movement toward including silver on such a list. This would be a significant policy shift because it would grant silver certain protections and benefits that other commodities do not receive. One of the benefits of being designated a critical mineral relates to government purchasing authority. When something is designated critical to national security, the government can stockpile it. Officials confirmed that there is a stockpiling initiative underway related to critical minerals. The amount being discussed in various reports suggests this is a substantial government commitment involving billions of dollars. According to reports, this stockpile involves participation from major American corporations, large technology companies, manufacturing firms, and defense contractors have been mentioned as participants. These companies apparently view access to reliable supplies of critical minerals as essential to their operations. The stockpile is reportedly structured to guarantee access at set prices, which would represent a form of price protection for these corporations. This stockpiling initiative appears to be distinct from the international trade policy discussions, but related in purpose. The goal seems to be ensuring American industry has access to materials deemed critical. The level of government involvement and investment suggests officials believe supply security is a serious concern. Now, let us examine the supply situation for silver based on publicly available data. Multiple reports indicate that global silver supply has not kept pace with demand over several years. Various analysts have calculated cumulative supply deficits where consumption exceeded production. These deficits are measured in millions of ounces and represent a structural imbalance. The reasons for this imbalance include growing industrial demand, particularly from renewable energy and electronic sectors, while mining output has remained relatively flat. Silver production is often a byproduct of copper and zinc mining, which means silver supply cannot quickly respond to price increases the way some commodities can. Separately, governments and institutions are reportedly accumulating precious metals, including silver, as part of currency reserves and economic strategy. This has been documented through various sources, including financial institution reports and government data. When you combine structural supply deficits with government accumulation efforts and concerns about supply security, it creates a scenario where government intervention to support pricing becomes more plausible. This is what financial analysts are examining regarding these recent policy announcements. Let us discuss what major financial institutions are currently saying about silver. Various banks and financial firms publish research on precious metals. Their current positioning on silver varies. Some analysts have published cautious assessments citing the volatility and the difficulty of predicting short-term prices. Other analysts point to the supply fundamentals as supportive of higher prices over time. JP Morgan has published research examining silver demand patterns. Goldman Sachs has shared analysis of precious metals markets. Various other major institutions have research available examining supply and demand dynamics. These reports represent different analytical viewpoints. Some reports have suggested that government policy intervention in precious metals markets would be unusual and potentially effective if implemented. However, there is also debate about whether such policies would work as intended or create unintended consequences. Now, regarding the strategic context, China has implemented restrictions on refined silver exports. This was done by limiting export licenses to certain approved companies, effectively controlling how much silver can leave China. This type of export control on strategic materials has precedent with rare earth elements, which China also restricts. In response, United States officials have discussed building a trading alliance focused on critical minerals. The idea would be that allied nations that produce these materials would maintain supply relationships within the alliance rather than selling to outside parties. This represents a strategic approach to supply chain security. When you examine these policy moves together, they tell a story of major powers competing for control of critical material supply chains. This competition creates market implications. If government policy direction is towards securing and supporting prices of critical minerals, that has investment implications. Let us examine the current price situation for silver. As of February 4th, 2026, silver is trading in a range around $91 to $92 per ounce according to various sources. This represents recovery from recent sharp declines that occurred late in January. Silver had risen to over $120 earlier in January before experiencing a sharp correction. The volatility in silver prices in recent months has been extreme. This volatility reflects various factors including financial leverage in markets, speculation, and responses to geopolitical news. Price swings of 30 to 40% in a matter of days are possible in silver futures markets due to leverage. However, the long-term trend for silver over the past year has been significantly higher. Silver that cost $30 per ounce a year ago is now trading around $90, representing a roughly threefold increase. This longer-term trend reflects the supply deficit situation and growing industrial demand. Historical perspective is useful. In the 1980s, silver reached an all-time high that, when adjusted for inflation, was worth significantly more in today's dollars than current prices. This historical context suggests there is room for silver prices to rise if fundamental drivers continue. Now, regarding the policy announcement specifically, financial analysts are examining whether government involvement in pricing mechanisms would support higher precious metals prices. If the government is willing to impose tariffs to prevent prices from falling below certain levels, that creates a floor under prices. A price floor means prices cannot easily fall below a certain point. For investors, the idea of a government-supported price floor is significant because it limits downside risk while upside remains open. If the government will not let prices fall below a certain level, the risk of catastrophic losses is reduced. This changes the risk-reward calculation. However, there are questions about whether such policies would actually be implemented and whether they would be effective if implemented. Trade policy is complex, and unintended consequences often emerge from policy intervention. interventions, so while the announcement is notable, the actual impact would depend on implementation. We should also note that government policy is subject to change. Election results, political changes, and shifting priorities all affect policy direction, so commitments made today might be reversed tomorrow by different administrations. This creates uncertainty about long-term policy stability. For precious metals investors specifically, these policy developments add a new element to the investment case. Rather than purely supply and demand fundamentals determining prices, government policy becomes a factor. This can be positive if policy supports higher prices, but also adds political uncertainty. Financial advisors commonly recommend precious metals as portfolio diversification due to their tendency to move independently of stocks. The recent announcements about government involvement in critical minerals pricing represent an evolution in the investment landscape. Diversification benefits might exist in different ways than they have historically. For those considering precious metals investments, it remains important to understand your own financial situation, risk tolerance, and investment objectives. Precious metals are volatile. Recent price movements demonstrate this clearly. Sharp declines are possible and can cause significant short-term losses. However, for investors with longer time horizons who view precious metals as long-term holdings rather than trading vehicles, the current environment with potential government support for pricing and strong supply fundamentals could present interesting opportunities. What is certain is that precious metals investment landscape is evolving. Government interest in securing supplies, international competition for critical materials, and policy discussions about pricing mechanisms all represent new developments. The long-term implications are still being determined. From a data perspective, the facts are clear. Silver has been designated as a critical mineral. Government stockpiling is underway. Supply deficits are documented. Major corporations are participating in supply security programs. International competition for mineral supplies is real, and senior government officials have publicly discussed price floor policies. Whether all of these factors result in significantly higher silver prices or whether markets and policies unfold differently remains to be determined, but the direction of government policy is now clearly toward treating precious metals and critical minerals as strategic assets worth protecting and supporting rather than leaving purely to market forces. This represents a potential fundamental shift in how precious metals are valued. Rather than being just another commodity subject to supply and demand, they are increasingly being treated as strategic assets by major governments. This gives precious metals a new dimension to their value proposition. For investors making decisions about precious metals, understanding this policy context is important. It helps explain recent price movements and potential future movements. It also suggests that volatility may continue as policy implications work through markets. The important thing is to make decisions based on your own financial situation, do your own research, and not make emotional decisions based on short-term price movements. The long-term trend and fundamental drivers may be favorable, but the path from here to there will likely be volatile. This is Alex Silverman. Understanding the data and the policy context is essential for informed decision-making about precious metals. Subscribe for more analysis of financial trends and policy implications.